So let's kick it off. 1869 was the peak. Okay, the golden spike goes in at Promontory Summit in May of that year. For those of you that don't know where that is, that's right outside of Salt Lake City,
Utah. Yeah.
You know, it was important at the time. It's not important today. Very funny way to think about it. The Suez Canal goes in November. 3,000 European guests, including Empress Eugenie, Franz Joseph. And then the last of those three was India linking Bombay to Calcutta the same year. What made that single year feel like the start of something new? In other words, there was an atmosphere and a mood about the world.
Well, a French newspaper cottons on to the fact that these three iconic projects have all been completed.
Yep.
And writes an article saying, you know, you can now go across the world in less than 80 days. And a young French adventure novelist, Jules Verne, stumbles across this article. And by the way, the French newspaper even gave an itinerary for what such a journey would look like. And, you know, a light bulb went on in his head, and he said, wouldn't that make a great novel?
It would.
So in 1873, Around the World in 80 Days appears. He actually didn't realize that it would make an even greater film, but that was...
Yeah, to come.
Quite a while
That was
later.
to come.
Yeah.
Yep.
Yeah. So between 1850 and 1873, the global bond market quintupled in size. Saving rates jumped in Britain, Germany, France, and the U.S. What made ordinary people willing to hand their money to markets they couldn't see?
So in the 1840s, there had been, and most of the savings, by the way, were based in Europe, were British, French, German.
Sure. Mm-hmm. Sure.
And there'd been a giant bear market caused by the collapse of the British railroad bubble and by revolutions across Europe. And that left everyone very, it had the impact of causing people not to want to invest in equities.
Apprehensive, I think, is the word you're looking for.
Right. You know, whenever you have these giant crashes, we had it after 29, you know, people become risk averse.
Oh, wait, I got to stop you there real quick. I'm 42 years old, okay? I got in the business right before 08 as a campus, so I have seen grown adults do that. But, I mean, and like that feeling... How foreign is that of an idea to like the last 5 years? I mean, because I think one of the things is like, you know, what we're going to talk about today is elongated moods of that.
Well,
not like, cool, I went through it for 60 days. Or, by the way, it was a 1 year bad market.
Well, I can help you a little bit on that, Cole, because you think about it, the market was lousy from 69 to 82, and then we had a 4-year bull market, and then we have the crash of 87, and all the smart guys were out there saying, well, we're going to have a depression now, and they were thinking that same thing that you're just talking about at that point in time.
Yeah, so how do you other than reading your book, which obviously people should do, how do you think and discuss that with people that have never seen some of this, you know, looking back, say, 10 years?
Right. I think the way to think of it is that you have different types of cycles.
Sure.
So you have the market always has ups and downs.
Sure.
But once in every 2 generations, you have a drastic change in the sort of mass psychology. And essentially, Galbraith wrote about this. He said, what it takes is a whole generation to disappear from Wall Street to then sort of recoup confidence.
Sure.
So 1850, you get this crash, and you wouldn't get people wouldn't go back into the equity market for another 25, 30 years.
Sure.
So we're talking about 25, 30 year cycles.
Yeah, which is why people were in the debt market to earn interest.
Yeah, initially.
Right.
Yeah. Yeah, that's why Willie Sutton robbed banks, right? Because that's where the money was.
Right.
Yeah. So Then Charles Mackay publishes his Extraordinary Popular Delusions and Madness of Crowds in 1841. You suggest he may have exaggerated some tales. The book has never gone out of print. Why does that book still hold up so well?
Well, because the things that go on are so crazy.
Yeah.
I mean, the South Sea bubble, that's and the associated bubble in France, those two combined, you had one company worth 150% of GDP.
Sure.
We're still not there yet. So.
Sure. Which was the Mississippi. There was the Mississippi bubble there in France.
Right.
Yeah.
Yeah.
But it was always good for government in both those cases. It was a good ploy for government.
Well, I never quite understood those bubbles because all they did was issue equity and then buy government securities. Now, why that was going to be a recipe for a giant, making tons of money I could never compute.
Sure. Well, I mean, like to your point on that, like I think of things like QSBS, for example, on, venture companies. Like, why do we give tax-free gains on venture companies to people that are very well? I mean, the government is funding it at some level or subsidizing it. So again,
Right.
These things are weird, but they still exist.
Right.
Let's go back to 1848 because you kind of started your story with it almost didn't happen, right? The Rothschilds nearly went under in 1848. Emergency loans from London and Frankfurt. French government bailed out, saved the Paris and Vienna branches. Lost, I think, a quarter of their capital at the time.
Yeah, 40%.
How does a family recover from an experience like that? I'm sure some people just died, and that's one way to recover in the family. But elsewhere, how do you recoup your capital and begin anew? Because this is a trust business that they're dealing in.
Yeah. Look, it helped that you got the passing of a new generation.
Sure.
So the people who lost money in 1848, it was the second generation of the Rothschilds. And over the next 5 years, in fact, I forget the precise date, but it was in the early 1850s, three of the brothers, there were 5 brothers, 3 of them passed away. So that left the bank in the hands of a whole new generation, who were the third generation. And they had so they managed to sort of, if you like, avoid hunkering down too much.
Sure.
And the next 25 years, they would go from having a bank with a capital of 20, 30 million to a bank with 200 billion.
Sure.
Million.
Sure. So under James Rothschild, as you just mentioned, the bank, makes this big move in capital. I think you noted in the book that they were a third of the capital of the entire European banking system.
Right.
What's your takeaway for James? What did he understand about diversification that obviously the prior generations or his father hadn't?
Yeah, I mean, in the case of James, he was the youngest of the 5. So he was actually the second generation, and he was in business with all his nephews and sons. What made him such a great risk taker? Two things. One is he knew when to say no. And he turned down some great opportunities. He turned down investing in the U.S., but he always knew the limitations of what he should invest in.
Sure.
And secondly, the Rothschilds of that generation were very good about plowing back profits into the business.
Sure.
They were making $1 million a year, and they made sure that $1 million went back into the business.
Sure.
So that by the 1870s, they were making $5 to $10 million a year.
Sure.